Good morning, everyone, and thank you all for joining us for our fourth dairy breakfast. It's great to have you all here. I'm Sheena Carter. I'm the Development Officer with the DPI Dairy team based in Scone in the Hunter Valley. For those of you that don't know me, just a reminder, we're recording this so it can be made available later. Please feel free to turn your cameras on, but keep yourselves muted until questions. And today our guests are Joanne Bills, who's Director with Fresh Agenda. Joanne's going to present on the current drivers of milk price globally and domestically. And we also have Adam Tomlinson, who's Manager of Customers and Programs for the Rural Assistance Authority, along with his colleagues, Karina Morris and Justine Dimmond, who will be explaining key support measures and assistance for storm and flood affected dairy farmers around the state. We'll also hear from Alana Connolly, who will be joining us. Alana's Regional Extension Officer with Subtropical Dairy, covering the northern New South Wales part of the state. And I'd also like to welcome, I think she is on the call this morning, Ashley Hammond. Ashley is Issues Manager and Stakeholder Engagement Coordinator with Dairy Australia, and along with Brad Granson and Paul Van Well, who are planning on joining. They're both the regional managers for the subtropical dairy. Brad is subtropical and Paul is Dairy New South Wales Regional Development Program. Before we launch into the session, I would like to acknowledge the traditional owners of the lands on which we're meeting today and elders past, present and emerging. We'll take questions at the end of each presentation, but feel free to use the chat box and type any questions as we go. If we can't get to questions in the time frame, we'll follow up with you afterwards. Okay, so as most in the audience would be aware, as part of the Dairy Mandatory Code of Conduct, processors now have to announce their minimum milk price by the 1st of June each year. So given we're getting close to this date, we've invited Joanne Bills to provide us some insight into the current drivers of milk prices globally and domestically. Jo is Director at Fresh Agenda, which is a team of analysts and consultants who focus on interpreting market and supply chain conditions in various sectors of the food industry, including particularly dairy. And Fresh Agenda were also heavily involved in the development of the Milk Value Portal, which is an online education tool to help people understand the many factors that shape the Australian farm gate milk prices. And it was an initiative of the Australian Dairy Products Federation, along with the support of the processors across the country. So welcome, Jo. I'll stop sharing my screen and hand over to you.
Thanks, Sheena. Just share my screen. Right, so good morning, everybody, and thanks very much for having me this morning. Just for those who aren't aware of Fresh Agenda and what we do, we have been in business since 2013. We run a platform called Global Dairy Directions, which is basically an adding up of the global dairy market through our dairy trade simulator. We decided when we launched into this area of work that if you're going to forecast, you must forecast often because things change all the time. So it's a continuous rolling outlook that's updated monthly, and our outputs are commodity and country balance sheets for dairy, as well as projected fundamental commodity values. Now, we don't call them price forecasts. These are commodity values which correspond to what we see the supply and demand to be in the next 12 to 24 months. And from that fundamental commodity value projection, we can estimate the impact on farm gate milk values, which is really what's underpinning my presentation this morning. Our clients range across the supply chain, as you can see on that graphic, from farm through manufacturing, trading and ingredient buyers. So hopefully that means we're not talking it up or talking it down, because someone's always going to be unhappy. But we also have a global and local client base. So with that bit of background, I just wanted to touch on why global markets matter. We get a lot of talk about we're a shrinking industry in Australia, we don't export as much as we used to, so why do global markets matter to us? Well, of course, Australia is pretty much an open market with no to low tariffs for dairy products, particularly from large producers and exporters like the US and New Zealand and soon to be European Union. Exports absorbed around 34% of the milk we produced in the last financial year, and we import around 32% of our manufacturing milk requirements in various commodities. Cheese exports can constitute about 42% of our outputs, as we say there, but we also import a lot of cheese that we consume locally. And we know that retailers and fast food chains do use international price benchmarks and trends to inform their contract negotiations. So we're not an island, we are part of a global market for dairy products, and we also have a chronic deficit of fat in this country. So we're very much connected to that global market. So where did we get to in terms of global markets in 2021? Well, we had severe limitations on milk growth out of the three major producing and exporting regions. Weather was a major factor in all three, but we're also starting to see some of the environmental policies that are being implemented, in particular in Europe and New Zealand, to really start to constrain milk production, and also this kind of sentiment of farmers and their attitude to investment. We were starting to see this spiralling of input costs, and in terms of the whole of supply chain, some of the logistic challenges were really starting to bite in 2021 with shortages of containers across the world. On the demand side, China imports have been resilient throughout 2021. In the EU and the US, with constrained milk production, really those domestic cheese markets have been their focus. We've had some economic growth stifled by COVID, but certainly in the first 12 to 18 months of the pandemic, we've seen those economic impacts on consumers really softened by a lot of government support. So to drill into some of the COVID impacts that we've seen in dairy, and I guess when we were sitting in March 2020 wondering what the heck was going to happen in this 1 in 100 year event, there was a lot of initial panic, but really we've seen no major demand disruption. In the EU, they ate more cheese. The US, because of the lockdown impacts on food service, they ate slightly less cheese. Fluid milk sales were initially up and we saw more butter produced. In the US, that was the most volatile market as a result of COVID. And a lot of that was to do with government assistance, particularly for the farm sector, that kind of encouraged production in the initial phases. We've seen them have a big influence on skim milk powder and cheese markets. But again, these logistic challenges have particularly affected the US with availability of ports and containers out of the West Coast, and that's been a major disruption for them. China's milk use has changed a fair bit. There's been a huge push from the Chinese government to encourage dairy consumption because of the immune supporting properties of dairy. So that's really helped consumption in China. It's meant that a lot of the local production has gone into fresh milk and fresh products, and that's really continued to support the need for imported ingredients into China. And then we've seen the restart inflation as the vaccine rollouts have continued and things have started to open up, that restart inflation has certainly reached into farm costs, and margins, particularly in Europe and the US, are under acute pressure, which again is meaning that supply has been quite constrained. What we're seeing in the first half of 2022, that weaker milk supply in major exporters, we think will persist through the first half of 2022 at least. We're starting to see these high farm input cost pressures really bite, even though milk prices are rising around the world. They're not probably rising quickly enough to address the input pressures that farmers are seeing. In New Zealand, we're seeing, particularly compared to this time last year where they had a bumper end to the season, New Zealand milk production just came out for February yesterday and it's down 7.2%. So tightening milk supply is going to be a real factor in this first half of the year as we lead into the peak of Northern Hemisphere production. Fertiliser costs, we think, will further erode the ability to really attain a good, strong spring peak for those Northern Hemisphere producers. We're seeing the structural change in milk or dairy production continuing, low growth in commodity output, with cheese, particularly for local markets in the US and the EU, really dominating production. If milk supply is constrained, those manufacturers will prioritise their local cheese market, and that's leading to really acutely tight stocks of skim milk powder and therefore butter. Global trade, at this stage at least, is remaining resilient. Obviously, China is critical to this, but a lot of the demand we've seen in recent GDT events and in our trade analysis is still fairly broad-based, which is really encouraging. China's building milk output, but again, that demand has stepped up, so we still see a gap there. And certainly imported ingredients, even at these higher prices, are still attractive for Chinese manufacturers given their high local cost of production. So I guess, you know, when we see dairy prices rising so quickly, we think this feels like 2014 perhaps, when we saw record high prices. And if you just have a look at that FAO food price index on the right hand side there, we're not quite at the dizzy heights that we attained in sort of 2013, 2014. At that time, dairy was the outlier. You can see the food price index was much lower than dairy. And what we had in 2014 was really a boom to bust. We had a precipitous commodity price fall after that peak. And that was really related to the opaque nature of Chinese demand. There wasn't a lot of visibility about the stock buildup and what real demand was in China, and when that basically stopped, that was one factor in that price fall. And of course, rolling back to 2014, that was Russian sanctions 1.0 when Crimea was annexed, and Europe and Australia certainly imposed some sanctions. And at that time, Russia was a major European market, so that caused a whole lot of disruption. This time it is different. It's more a supply side issue rather than really strong demand out of China that back in 24, a lot of suppliers, in particular New Zealand, were able to respond to. We've got this global pandemic that is continuing to roll on with a whole lot of positive and negative impacts on demand and supply. And we're seeing this very broad-based food price inflation. So you can see that food price index has pretty much moved in lockstep with dairy. In fact, dairy's probably lagged. And that means in terms of being able to, say, substitute dairy fats for vegetable oils or other sources of fat, that's not really an attractive option for manufacturers either. So it's a broad-based price inflation, and a lot of dairy ingredient users really have nowhere to go. And then, of course, layered on top of that is the Eastern European conflict that's still playing out. So for our short-term global outlook, we think there'll be firm milk powder and fat values going into 2022 or continuing into 2022. There's low stocks to use. So that means the turnover of stocks is very low and there's not a lot of stock buildup in the system. And it's a lot worse than we saw in 2014. Butter fat prices are more fragile. We tend to see a lot more pushback in terms of demand from high butter prices. But again, there are very few low-priced alternatives out there for dairy fats at the moment. We're likely to see a lower skim milk powder and butter output again as these Northern Hemisphere producers prioritise their own cheese markets. And we see that lagged effect of the commodity values that flow into what we call the Australian commodity milk value, which I'll go into a bit of detail. So the bottom right-hand corner has got our projections, our projected fundamental values, not prices, for commodities going forward into the next 12 to 24 months. So what is the commodity milk value? Well, this is something that we calculate and update on our website. We look at the industry's product mix, we make an allowance for conversion costs, and we come up with a commodity milk value, which is basically the underlying milk equivalent of commodity values. And on top of that, when you get to a final farm gate price, there's a capacity to add higher value. So that's really the exposure to higher valued fresh product and domestic markets that then results in a full year price range. So the final price will depend on how much premium is available to individual processors, what their business models are. And when we're talking about what the opening price is likely to be, that's a lot to do with how much competition there is for milk supply in each regional area. So the commodity milk value really firmed very strongly, particularly in the last quarter of 2021, and it's continued into the first quarter this year. So we've had the commodity milk value sitting above $10 a kilogram milk solids for some weeks. And the full year to date is close to $8. Southern farm gate prices have edged up, and we're likely to see a little bit more action in the last quarter. We expect the southern farm gate milk price to be in that 720 to 730 kilogram milk solids range. But again, just like in those overseas markets, a lot of the input inflation and operation in disruption from COVID will be lifting processor and farm costs. So the margins are still going to be, keen. So looking ahead to 22-23, our CMV outlook is to lift to $8. And that was our latest February 2022 outlook. And I would say in the last month, despite last week's GDT result, it's probably strengthened, in fact, in terms of our view for the 2022-23 price. So that would give us a full year southern price, and by southern we mean Victoria, Tasmania, Southeast South Australia, of between $8.20 and $8.60. This would be despite the Australian dollar being forecast at the moment at 74 cents. But again, given the geopolitical situation, the disruption that's out there, the Australian dollars could well be a lot lower than that. So the margin for domestic premium above that commodity milk value that sets the final price, again, will be impacted by higher costs that processors are incurring. So in terms of New South Wales milk value, the margin over Victorian values has traditionally been around about 25% over the last 5 years, but we've seen there's a tendency to lag when there are sudden year-on-year movements in the southern milk price that are related to that underlying commodity value. And that's because for the domestic market, there's a lot less variation in fresh product returns. A lot of the tradable product is contracted. But retailers are coming down from their COVID highs. We saw during the COVID lockdowns that retailers did very well with everybody stuck at home. They also incurred more costs with staffing and some of the COVID measures that they've put in place, and they are facing increasing supply chain costs. So I guess we're putting out there that some of those domestic market issues might dampen the size of the movement into New South Wales, given its focus on fresh and local markets. Some of the other pricing considerations are really around the milk pool available. So, as always, manufacturers are looking at their capacity and throughput requirements and how competitive the marketplace for raw milk supplies are. And certainly that continues to be highly competitive. We're seeing milk price down 3 to 4% for the current season. And we're also seeing that these better conditions that we're seeing in terms of price and seasonal conditions aren't really converting to milk. So, around the industry, we've said, if we could put 3 good seasons of, good weather and positive prices, then we'd see milk production grow. We're not seeing that. And that's really reflecting those higher input costs, some of the labour scarcity that farmers are experiencing. And we're also again seeing that broad-based strength in commodity values. So beef has also been very strong over the last couple of years. So if you're looking at, you've got really good milk price, but also good value for your cull cows, or the ability to incorporate some beef into your system, or in fact exit dairy and produce beef for a cruisier lifestyle with less labour requirement, that's really taking the edge off that incentive to grow milk production, we feel, in Australia. So what will be the impact of an improved 2023 milk price, we think there probably won't be much of an impact because of these factors that are influencing individual farm decisions. So that keeps competition strong. We feel that in New South Wales, fresh milk sourcing risks are only increasing. We see milk moving up the east coast, traditionally from Victoria to New South Wales to Queensland. So while those deficits in Queensland increase, New South Wales milk is getting pulled north, and so is Victorian milk. Most of that Victorian milk comes from the northern Victorian region, which is very well serviced with water markets at the moment, but obviously those water markets continue to be a risk from year to year if we have a significant change in weather conditions. So that's still really a competitive and dynamic space in terms of securing milk for milk processors. And we've also seen that some of the major processors are the ones that have lost some of their milk supply to smaller, more agile processors. So that's going to keep that competition very strong. And then there is the perennial question, what is the milk price? And as Sheena referred to, the mandatory dairy code has been brought in. It was implemented last year. That was its first full year of operation. It has improved transparency, but arguably it hasn't improved the complexity that farmers face when they're looking across the availability of milk processor contracts and what that means on their farm. So this is just a bit of a snapshot of all of the companies, the various milk supply agreements that are on offer with different charges, bonuses and all the rest of it that farmers have to navigate when they're coming up to looking at the new season price. So the milk value portal, has really been developed to add some, I guess, clarity to what those milk price agreements might mean for a particular individual farm situation. So if you log into the milk value portal and look at the milk value calculator, you can locate the region that you're in, and in the MVP, New South Wales refers to central and northern New South Wales. Southern New South Wales, the Riverina, is actually in the North Vic region because that's really where the milk is used. You then select a farm size, fat and protein contract and supply profile that's similar to a farm that you want to look at. So that's the average for New South Wales fits into that profile there. The averages for fat and protein content, as well as the seasonality of supply, refer to within the region. So within New South Wales, it's a fairly flat seasonal profile. And then you can see what the season average and quarterly prices that are on offer in all of those milk supply contracts that apply to that region. So in New South Wales, unlike some of the southern regions, there's not a lot of variation between spring and winter or autumn milk prices, but you can see them arranged there. And the weighted average price is the dot in the middle of the right-hand screen there. And what you can see in the bars is really the range that's available. So you will see from time to time, if farmers are talking to other farmers, there is a range of prices available to them, but that weighted average really locates where the region is in terms of average pricing, because obviously there are some smaller processors that offer quite high prices, but they don't represent a large share of the regional milk supply. So, having wrapped all that, I just want to finish, Sheena, if I can, just with the New South Wales price outlook. Based on fundamentals and history, we would see New South Wales punching through $10 a kilogram milk solids next season, based on our commodity milk value outlook and the premium above southern milk price. Again, there's always wildcards, but there certainly is right now. Escalating geopolitical conflict. There'll be more COVID and less support. It'll be different, but the pandemic stays with us. And obviously those local retailer dynamics will also have an impact. So thanks, Sheena. That was all I had. So happy to take questions if we have time.
Yes, fantastic. Thank you very much, Jo. Very insightful and encompassing lots and lots of factors at play in our markets at the moment. It's yeah, a busy space, isn't it? I think you know, things like the milk value portal, sorry, certainly help to help us understand some of that picture. I guess it still highlights that you need to really get an income estimate from your processor to find your final point, though. Anyone questions? Paul? Yes, Paul says, thanks, Jo. We'll need to go back over the recording to cover all of it again, and it has been a very rich and intense presentation. Are there any other questions? Jo, if I could just get you to stop sharing your screen, then if people would either like to put their hand up or unmute themselves if there are further questions. No. I just have one question, Jo. In terms of, we've sort of got our international pricing factors at play. How long do you tend to see those factors, you know, until they translate in shift in prices domestically? Sort of lag time.
Yeah, I guess for southern milk regions, it's usually a 6 to 12 month timeframe, really, depending on when those prices start to move. And we often see the commodity milk value rise in the second half of the season, when a lot of the milk production is obviously already sold and there's not a lot available for spot trade. So local manufacturers aren't getting the benefit from those commodity values. But when they come into price negotiations for the next season, that's really where we see the rubber hit the road in terms of those improved prices.
Yeah, okay. Fantastic. Thank you, Jo, very much. Much appreciated. Given we've got a couple more presentations, if no one has any further questions, we will jump into the Rural Assistance Authority presentation. Doesn't look like it. Okay, so as we're fully aware, we've had many farmers severely impacted by the devastating floods that started last month, all along the coastline of New South Wales, particularly obviously the North Coast region, where it's been record flood levels and just devastating. So I think, you know, across the state, there's it's around 58 local government areas have been declared as natural disaster areas, which is just a huge scale. So I'd like to welcome Adam, Karina and Justine from the Rural Assistance Authority. They're going to step through some of the financial support that is available to farmers who have been impacted, and then we'll also hear briefly from Alana Connolly on other industry support for dairy farmers in the affected regions. And I believe, Alan, you're going to, Adam is going to do the presentation. Adam, if you'd just like to hit presentation mode on your PowerPoint, then we can get the full thing and you can carry on. Down to.
Thanks, Sheena. I think it is. Is it on? Can people see the presentation? I understand it's shared on my screen.
Yeah, for some reason we can see the bar, your everything else that's open at the top, but we can still see a slide. So
great. Okay. Well, thank you very much. Thanks, Sheena, and thanks, Nico, for inviting us along today. As you've mentioned, it's been quite a devastating time with the disasters. It's on the back of drought, then bushfires, and now floods. So it has been a busy period for the Rural Assistance Authority. For this presentation today, I will cover the application side of things, so the different programs going through to the approval phase, and then I'll hand over to my colleague Justine Demond and Karina Morris to talk about the claiming process at the Rural Assistance Authority, but also the supply chain support grant, which is something they've administered, particularly that program. So first of all, on this slide here, which shows the storms and flood or severe weather and flood programs that we've had announced and are working on at the Rural Assistance Authority, going back to the February-March 21 disaster that was declared, and a program launched at the RAA in April, and that the initial program being the $75,000 Category D grants. Now, to date, we've had over 6,000 applications for that. We expect all of those applicants have been, their cases have been allocated and have an assessment officer working on them. We expect that we'll see around 4,000 approved applications for that program in the next few weeks. At this point in time, customers, approved applicants have through until the 1st of June to submit claims for that event, which is the February-March 21 special disaster grants. In around September last year, there were further programs that were announced, supply chain support grant that Karina or Justine may speak on a bit later in the presentation, but also rural landholder grants for those landholders with 10 hectares or more and turning over $20,000 in primary production that could access a $10,000 grant from that, going back to that event in February, March. So anything that had been costs incurred since that time. And like the special disaster grants, they have through until the 1st of June to put those claims forward and for payment. Then we moved on to November, and we've seen around 1,700 applications for the disasters that happened from the, I think it was the 9th of November onwards. Largely the Forbes LGAs and Gunnedah and Narrabri LGAs are big areas where we're seeing applicants submit their forms from, and that grant being a Category D, it was still from based on damage surveys, it's a $50,000 grant, and there is crossover where in November people that endured that disaster event were also one of the LGAs that had been impacted in that February-March earlier in the year. So we are seeing lots of crossover between those two events and then the programs that we're running. Then we move on to February this year, and for Lismore, particularly the North Coast, we're heading right down the coast. We've seen, and we'll get to a map shortly that shows the areas that have been included in that program thus far. And that's going back with the damage surveys back to a $75,000 special disaster grant. We've nearly hit 1,000 applications. We're in the high 900s now, I think, and we're busy working on those applications as well. So standing up a team through COVID times and just getting the staff on board to review these applications and do the due diligence has been our challenge, and we're working away at that. Just in recent days, we've also had a rural landholders grant announcement to assist those that are not eligible for the special disaster grants, but going back to that 10 hectares or more or $20,000 in turnover per annum or more being key eligibility criteria for that grant as well. Next slide, please. So this map here, and there's maps for the different, or particularly the November disaster event, but this is a map just really wanting to highlight how the LGAs have been declared. Obviously, the green area, so the north east of the state, shows the initial declaration on the 3rd of March, covering those LGAs there. I think there may have been something like 17 or so initially. And then we worked down the coastline, and you can see there's another declaration. I think it may have been the 5th of March, and then another declaration since then as well. So ultimately, this is relating to the February 22 event. And at this stage, I think, as mentioned, is in the high 50s LGA. I think it's actually 57 declared to date, and we've received something like the high 900s in applications so far. This provides a bit of an indication of how the program runs, and this is focusing on the February 22 event, and it gives you an idea that we have applications open for 6 months from the declaration, and then we have claims for 12 months from the declaration date, and that's at this point in time. That's what we work off. So if you're dealing, so if there's dairy farmers on the call or industry participants on the call, please keep note of those dates, because ideally, we don't want people self-assessing. We want people working on their applications and getting them into us so that we can work through that queue and provide them the approval if they're eligible, and then obviously give them full notice on how long they've got to present their claims for payment. So from an eligibility point of view, this is the $75,000 special disaster grant. It is consistent with what we've been doing for other disaster programs. Hence that slide showing we've been working on these since the bushfires, but also with February, March last year. A key part of that criteria is being a primary producer and earning 50% or more of your gross income from primary production. We do want to see that the applicant are active primary producers, so not just adjusting their livestock, as an example, but playing an active role in primary production on their land or their leased land, and have an ABN, be located in one of the declared LGA, so through a rates notice, LLS notice, being able to provide evidence to that, which we'll always ask for. And I guess the other key parts that we really want to check is that being re-establishing the business or continuing the business. So we want to be able to confirm that business is, by accessing the grant, they're staying in business and also proactively looking to keep contributing to the primary production value in this state. So there's some really key points there to cover. But as I said, it's very consistent with the other programs that the RAA had been administering. I know there's people on this call who are quite aware of that. However, if there's ever any queries, please make sure they come through to us. Look, hopefully, if Justine's there or Karina, I might pass over to them to cover this slide, and then be available for questions at the end.
Thanks, Adam. Yeah, sorry, Justine's had to duck to another meeting. It was a conflicting meeting. So, so I'm obviously, as Adam mentioned, Karina Morris, I'm the Program Manager or Program Officer for the Supply Chain Support Grant. And I guess this slide's based on the claims process or those additional invoices for the February 2022 flood event. So there'll be a $15,000 upfront payment to eligible applicants. So obviously meeting that criteria from the slide before, they will receive $15,000 without providing any invoices at that point. What they will need to, as Adam mentioned as well, they do actually have a 12-month window to provide invoices to reach that $75,000. So from the declaration date, they have 12 months to provide invoices. I guess with the current events, with February 2022 and obviously November and floods from last year, we're just, obviously we understand that it's quite difficult to understand which invoices are relating to which event. So we're just kind of thinking it's the best option to provide, or for applicants to be able to file or sort invoices relating to which event. So obviously with February, March 2021 floods, any works that were still underway or still in that repair process that have been damaged again can be submitted under those older flood events. But it's obviously we're trying our best to make sure that we're allocating those invoices to the correct disaster. But on our end, we obviously can provide that support through that claims request or through our website to be able to obviously allocate them to the correct event. Obviously, I mentioned, so I'm Program Officer for Supply Chain Support Grant. So this grant was on the back of the February, March 2021 floods. So this is more to targeted industries. So at current, the targeted industry for this event was for dairy, and they're eligible for a $100,000 a grant. So applications open on the 30th of September. The applications have been extended. The closure date is now the 30th of June this year.
So it was, we have extended that for a 3-month period. So obviously we've got a bit of time there for applications to be submitted. All invoices are to be submitted before on the 30th of May 2023. So there is a 12-month window to provide invoices for this event. And as I mentioned, it's $100,000 for dairy. And I guess the eligibility for this supply chain support grant is applicants must have the full $75,000 dispersed in the initial disaster assistance in February, March. So the $75,000 that was eligible last year, that has to be fully dispersed before any funding under supply chain is to be released. Based on the same criteria as all other programs, so they do need to be have a eligible LGA. So in those declared LGAs, they do need to meet the 50% primary production. Also in this program that's different to others, they do actually need to provide a co-contribution towards the grant. So for example, a dairy farmer is eligible for $100,000. So the applicant will need to provide a co-contribution of $100,000, and that can be made up of different options. So it can either be direct cash, it can be in-kind contribution, so in-kind labour. Any labour that was done throughout the cleanup and repair on the property is a co-contribution, and also in-kind invoices. So any invoices that have been paid and unclaimed under any other grant or program, they can be eligible as an in-kind invoice. And also the grant is broken down into milestone payments. So for the dairy industry, it'll be broken down into 4 $25,000 payments, and that will be reached upon providing evidence of the first amount spent. So this obviously breaks it down into those milestones. So if an applicant for dairy is approved for $100,000, the first milestone payment is $25,000, which will be deposited into the nominated bank account once a funding deed has been executed. After that point, the applicant will need to provide evidence of invoices for the $25,000. So those invoices do have to be dated the 30th of the 9th, 2021. And with that milestone contribution, they will need to provide $25,000 of their contribution, and that can be either made up of, like we mentioned, direct cash, in-kind invoices, or in-kind labour. And once that is matched off, the second lot of funding will be released to the applicant, and so on. So as long as they provide the evidence of those milestones, the additional funding will be released to the applicant. I guess that's all, obviously, yeah, all I have for supply chain, but obviously if there's any questions in regards to the current programs we do have that Adam touched on, or supply chain, or the supply chain support grant, I guess we'll open it up to questions if we have time.
Yes, thanks, Karina. And Adam, thank you very much. I'm sure we do have some questions. I've probably got some questions too, but I see Dan Cochran, you were saying that you find it quite complex. Where is Dan? I can't see him on the call. Obviously, we've also got rural financial counsellors out in each of the regions, which I would probably suggest people reach out to in the first instance. Karina, Adam, do you have any other support offers for farmers that are finding this space confusing?
Karina, I'll have a go first. But rural financial counsellors, I think that was a very good call out to them. In the event people are looking for someone to help. There's also the Rural Recovery Support Services team, so the DPI recovery officers that are there as well. That can be there to assist, particularly that February-March 21 program, which has the supply chain support grant at the moment. So And look, to be honest, our administration team, we had them working, so the people who take the phone calls, we had them working over the weekends for the first few weekends of the last disaster, but they are also a busy team, and that they will take inquiry and refer those to the respective people, whether it's Karina or myself or whoever else.
Okay, thank you, Adam. I've got two questions from Paul and Josh. I don't know who was first, but Paul, you're on my left top corner, so you can fire away first.
Thanks, Sheena. So just, I guess some of the main damage in, and, you know, not exclusively, some of the main damage in the Dairy New South Wales region recently has been, there's been some stock losses, some fence damage, a lot of pasture and crop underwater at times, which will need reworking. There's been paddock sacrifice to standoff areas for stock, which will need to be rejuvenated as well. You know, there's been some milk discarded, milk quality has been impacted, and laneways, you know, eroded and things like that. So I know that's a bit of a shopping list there, but just wondering whether you could give some guidance on the types of those elements that would be eligible as invoices. And obviously from a feed perspective, people are feeding out at the moment more of their reserves than they normally would be at this time of year. So there's an impact on their inventory of their own feed because, you know, those paddocks are underwater and they just couldn't put cattle out on the ones that weren't either because they just get too pugged up. So just, you know, if we could get some sort of discussion on what of those types of elements are eligible.
Yeah, sure, Paul. So on our website, we do actually have the eligible activities that for each disaster declared, but the things that you've obviously mentioned, so obviously earthworks as being a big one, and that's eligible. Stock replacement, so obviously in the current floods we have heard of large stock numbers, and obviously on our end we just require evidence of that, so either it be you know, the stock tags or anything from LLS, any reports or things like that with the stock numbers that have been lost in the current event, it helps us to then determine what impacts and then how to then correctly distribute those funds. In regards to pasture repair, that's obviously an eligible expense. Also fodder. So purchasing fodder, I know applicants have had to purchase a lot of fodder at the moment, which is definitely eligible. So these, like I said, all of these activities are across all our programs. But I guess one thing is for the February-March 2021 floods, the closure date for invoices is the 1st of June. So we're just kind of making sure that we can get allocate the correct funds to the correct programs. And I do know there's a lot of applicants that have been impacted by, you know, all three events. So we're just wanting to make sure that we can obviously provide all the support we can, and obviously making sure that we can put those funds in the correct program. But definitely on our website is a list of the eligible activities, and obviously like Adam mentioned, our admin team and myself were always available if we did have any questions or any kind of ones that you weren't sure of. We're definitely more than happy to take those calls and get an answer for you.
Thanks, Karina. Thanks, Paul.
Just to add,
sorry, Adam.
Sorry, Shani, just to add, there may be some changes to eligible activities and things like that as we move forward. And if that's the case, we will look to do email distribution or at least an industry stakeholder update. So I just thought just put everyone on notice that if there are changes, we will make sure when we get clarity with our funders how that is to be rolled out to the audience, we'll make sure that we work out those communications and get them out there to explain them.
Fantastic. Thanks, Adam. Josh, over to you. We'll have Josh's question and then we'll go back and hear from Alana Connolly and have subsequent questions after that. Josh.
Thanks, Sheena. Thanks for all the information. That's great. What's a reasonable expectation for a farmer because I come across it every now and again, and they sort of get a bit, they don't know where to go or who to go to. But if they've already submitted some receipts or etc. for payment, and I know that you guys, especially with the current floods, and these are more from even the stuff that was done early on in the year. So with the workload that's increased from the northern rivers, etc., what's a reasonable expectation from farmers to be able to hear back from you guys in terms of receipts being submitted to, payment, etc., if it all goes through okay?
Yes, certainly. So at this stage, we do actually have a high volume of obviously influx of invoices and claims requests coming through. We are in the process of, I guess, getting more hands on deck, so to speak. So we are increasing that that space there to then obviously get those out as quickly as possible. Our team are picking them up within, the week from when they're submitted, but there could potentially be questions and things like that regarding invoices, which our payments team reach out to applicants and have that conversation and get some clarity if required. But like I said, we are getting some, I guess, more manpower in that space, and hopefully with that high volume of work coming, we're able to keep our timeframes as where we are at the moment.
So would 1, 2 months, 3 months, just a rough idea, especially some.
Yeah. So at this stage, can't really probably comment on the actual approval and that first initial payment going out the door. That kind of, at the moment, we're getting those through quite quickly, but obviously there is a high volume of applications coming through. But in regards to the actual additional invoices side of things, within a 2-week time frame at this stage, they are receiving funds.
Just to add to that,
Okay,
Karina and Josh, we with that 1st of June claims cutoff period, we really want to see the claims paid for by the end of June. So to try to have the program paid, I guess, to customers before the end of June. So that 2-week time frame to what Karina just mentioned is something that we're aiming for.
Thank you.
Lovely. Okay. We might flick to Alana now so that we can get some perspective from Subtropical Dairy, Dairy New South Wales and Dairy Australia around what's on offer. So thank you, Alana. You've joined Subtropical Dairy at a very intense time. So I'm sure it's been a baptism of fire, but it's a very quick way to meet people within the industry. But yes, if you could just outline what is available through Dairy Australia and the regional development programs for farmers up north.
Thank you, Sheena. Good morning, everyone. So Subtropical Dairy and Dairy New South Wales have made contact with flood-affected farmers to capture the impacts and damage, and as well as identify a need for assistance. So a total of 208 farmers have been contacted directly across New South Wales and Southeast Queensland. On the North Coast, we do have one-on-one farm support being provided for dairy farmers in the areas of mastitis, lameness management, hoof trimming, nutrition, mental health support, as well as financial grant application. We are intending on having business planning support to become available to impacted farms. For assistance applying for flood recovery grants, Subtropical Dairy has contracted Andrew Ellum to support farmers to complete and lodge their RAA applications. In addition, farmers can go through rural financial counselling services by calling the 1-800 number on their website. To access this support and for any further information, I will put my contact information, both phone number and email, in the chat window. But we also have some communication going out through social media and e-news publications. So anyone looking to subscribe to our e-news publications, we do post them on our Facebook profile. But you can also do so on the Subtropical Dairy website by searching e-news subscription in the search bar.
Thanks, Alana. Yeah, and look, I think it's great. We've seen this similar support rolled out last year in the Mid-Coast region, coming from Dairy Australia and the RDPs, which is wonderful. It's a very intense period and farmers under a lot of pressure, so it's good to be able to reach out and support them. Did Paul or Ashley, did you want to add anything further from a RDP or Dairy Australia point of view?
Thanks, Sheena. No, look, I think Alana covered it really well. We've obviously, part of the response as well, I guess, at that higher level for Dairy Australia is activating the issues management framework, which is my role as the issues manager. So yeah, we've obviously had that going on, and there's been email updates and that sort of thing sent out as well. But no, I think from an on the ground response, Alana covered it off really well. And yeah, Subtropical have been flying along in terms of the response and contacting farmers directly, which is fantastic.
Wonderful. Thanks, Ashley. Paul?
Thanks, Sheena. Yeah, look, I guess over and above the the calls and things that have been made, and looking to connect people to the various support agencies and things like that, and the programs that DA is running. If people are aware of people in particular need, please let us know. We may not be the agency to resolve the challenge, but then hopefully we can connect them to the right people. Certainly from a mental health perspective, some of our REOs have been talking to people that are obviously under extreme stress, and then there was a lot of nervousness in the Mid-Coast region where people felt really quite triggered, even though the floods certainly weren't as severe as what they had been the previous year. But they were just on they were on an edge, and that tension was really there. And so if you're aware of people, please reach out to us, and we make sure we connect them. Thanks, Sheena.
Thanks, Paul. That's excellent. Craig, did you want to unmute yourself, because you had an earlier question in the chat too, and you've also made a comment. If you're happy to unmute yourself, otherwise I can go back into the chat and find them. No, I'll just scroll back up. Craig mentioned the regional investment.
Can you hear me now?
Ah, yes, got you. Thanks,
Sorry.
Craig.
It was a bit slow on the unmute. Yeah, no, that's all right. The question can go through to the keeper, but actually, just a heads up, Alana, you'll be getting a blurb from us for the newsletter about the farm investment loan. So clearly, a number of people have accessed the drought loans over the last couple of years, but the Regional Investment Corporation's farm investment loan can be used where the grant and the RAA haven't spoken about it today, but of course there's a $130,000 loan that they administer to assist with recovery. But if a producer's suffered greater damage, if you like, or have a higher recovery cost, then our farm investment loans can be utilised to restock, replant, pay working capital, as well as if they've got existing debt, we not only can we lend them new money, but they can also refinance with bank debt, which might free up the cash flow, particularly as Paul noted earlier. I guess in a previous life, I've dealt with a number of the floods in southeast Queensland. We know the impact on trying to get a herd back to full capacity. It's not easy, particularly if mastitis has really taken hold. So there's going to be that cost of either trying to get back up to full production or replacing we're replacing the herd or part of the herd. So those dollars can be a bit big, and that's what the farm investment loan is there to assist with.
Lovely. Thank you, Craig. Much appreciated.
Sheena, would you like me just to comment to Craig's question? Just to let everyone know, we have actually completed 3,888 special disaster grants from February-March 21 event. So that means that they've been paid that 15, and they also have got through until the 1st of June to make a claim. So there are the backlog there. All applications have been allocated to an assessor, so they're all being talked about with the applicant at the moment. So we're hoping, as I mentioned earlier, it might end up around that 4,000 approved as a projection. So that's to answer that question. And also, yeah, just to further on from Craig's point, we do have $130,000 loans, the 12-year loans with 2-year repayment free that are also accessible at the New South Wales Rural Assistance Authority, as well as transport subsidy for fodder and the items like that as well. So there are some other measures that fall under the Category B disaster declarations.
Okay, thanks, Adam. We are at 9:30, and Dan, I do see you've got your hand up. If you could make it really quick, please. Not here. Sorry, Dan, we've got you at the bottom of a well. I can't hear you.
Hello. Hello.
Yep, go Dan.
Very good present.
No, we've lost you, Dan, sorry.
I don't fully the supply chain grant and how that fully works, and I think that needs to be put out from industry exactly. Maybe just a dumb farmer should.
Sorry, Dan, we're getting only part of your comments, but I'm gathering that you're struggling with the supply chain grant application and would like a simpler, clearer document for people to follow. Is that a quick yes?
A sheet put out from industry, whether it be DPI, whether it be RAA, whatever it is, so that farmers don't have to go and.
Yeah, we've lost you again, but we'll take that up as an action and distribute that out.
Yes.
So, sorry, Dan, we can't hear you. But we'll take that up as an action and follow that up and distribute through DPI and the RDPs.
I'm back again, Sheena.
Oh.
I've actually got to catch up with my father-in-law for a coffee here in 5 minutes. What I will say too is that from farmers from whether they be from the the north coast right through to Bega, we have been flogged from drought to fires to floods to floods to floods. None of us have got any spare cash in our account, and honestly, all these programs and everything else helps. But the true thing is, these are only band-aid solutions. The market needs to rise, and if we can achieve $10 kilo solids this year, we don't just want to see that for this year. We want to see that for the following years. And that is the only true way that it's going to happen. And it's only going to happen where all parts of the industry start pointing their fingers at the retailers and saying to them, you need to pay more for dairy products, and more of that needs to come back to the farm gate. Anyway,
yep.
I've got to go.
Thanks. Yeah, no, that's good. Thank you. And look, there are all sorts of market forces and obviously inflationary pressures on margins. So, yeah, thanks for your comments, Dan. Now, look, I would like to thank all our presenters, Adam and Alana and Karina. Jo has left and no, she's not. There she is. Thank you, Jo. We did have a question from Josh, but we'll have to leave that. Sorry. And we will have another webinar in June, which keep your eyes open for that one. But thank you all for participating this morning. I hope it has been of value to everyone, and reach out to us if you would like some further information on any of today's sessions. So thank you all very much, much appreciated.